Hey guys, alright, so sorry for shouting. I don't know why I just shouted. But in this video, we're going to be talking about what a lot size is. Or in other words, what does it mean by lot size slash units? And the reason why this is important is because in MetaTrader 4 and in other platforms you may use, if you don't decide to use what I recommend, um, they're going to ask you what lot size do you want to buy or sell currency pairs at. And I want to get you guys familiar with this concept before I take you guys over to the MetaTrader 4 platform or the FX Trade platform. So things will make sense. I won't have to kind of re-explain these things, too in depth. I want you guys to have an understanding of what's going on. And before we actually get into lot size, the reason why lot size exists is because there's a thing called leverage. But leverage is not too important. You don't utilize that on a daily basis. It's only once when you're setting up your account. So I'm going to briefly go over what that means. So leverage is essentially you borrowing from the bank. And that's the reason why your small $2,000 can make you up to 200% in about 2 months, which is what I did with my account. You can make several times the amount of money if you know what you're doing, as opposed to other general investments that give you 1% a year. You can do high percentages because of a thing called leverage. So higher leverage means you're borrowing money to match your own. So let's say $2,000, you have a high leverage. You can borrow another 100K from the bank. Although this won't show up on your app, and behind the scenes, you really are borrowing about $100,000 more from your bank, depending on what leverage size you use. And then when you place a trade, these trades will be very, very high profitable. So that you can make a lot of money, or you can lose a lot of money if it goes back to you. So leverage, in simple terms, higher leverage you utilize, the higher risk, and higher risk means that you can make more money or you can lose more money. So if you're in the U.S., I would recommend using a 1 to 50 leverage. If you're anywhere outside the U.S., I would recommend using the 1 to 50 as well. But if you're a little bit ambitious, you can use 1 to 100. But 1 to 50 is really good. So that's what it says up here. It's 1 to 50. It's going to ask you in the setup. I'll show you guys how to do the setup and everything. But in the setup, it's going to give you a couple different types of leverages you could use, and I would recommend using 1 to 50. With regards to what the actual ratios mean, I mean, you guys can search that up on the internet if you really want to. I'm not going to explain that in this course because it's not important whatsoever. It's only a one-time thing. But yeah, so we're going to go over lot size right now. So to start off with that, there are two types of different lot sizes. So that's what we call over here in the space. We have the decimal lot size, right? Right here, you have the decimal lot size, okay? And then you have what you call units. All right, so decimal lot size is what we use in MetaTrader 4. MetaTrader 4 is the app where I actually conduct trades. And when you're trying to buy a currency, it's going to ask you what lot size you want to buy it at. And so it's probably going to start off with 0.01, and you can increase that to whatever number you'd like to, even up to 50 or 100. And that just depends on how much leverage you have. So sorry, let me explain that again. So if you have, the reason why higher leverage is important, or why the reason why leverage is important, because if you have higher leverage, you can buy things at a higher lot size, and at a higher lot size, you can make or lose more money. By the time we finish this video, you'll understand more about what that means. But let's say, for example, you can buy a higher lot size if you have a higher leverage with the same amount of investment. So if I had $2,000 and with a 1 to 10, leverage, I could only buy 0.2 or 0.01 lot size. If I had a 1 to 50, I could probably buy max at a 1.00 instead of 0.01. If you get what I'm saying. So if that's not too clear, there's so many different sources out there that can help you with this kind of information, but it's not too super important. I kind of just want to give you a background for this. So you have the decimal lot size, and then you have some apps like FX Trade, for example, which I'm going to be showing you guys how to use and why it's important. Actually have it in units. So just to give you the equivalent, 1,000 units is 0.01 decimal lots, right? So the way you calculate this is that you just take the amount of units you have and divide it by 100,000. So 1,000 divided by 100,000 will give you 0.01. So they're actually equal. So this will make you the same amount of money with the same initial investment. And then so just to scale up, 100,000 units, if you divide that by 100, thousand is going to give you 1.00 decimal lots. So that's just explaining that. Now I'm going to go over to why lot size is important. How does this affect our investment? So before I do that, I need to explain to you what micropips and pips are, because that's going to be part of our formula for calculating how much money you make. So to start off, a micropip, okay, is the decimal place in the price furthest to the right. So that would be number 5 right here. That is one. This is a micropip. This is the micropip decimal place, okay? And a pip is simply just the number to the left of that. It's 4, right? So normally when you're calculating decimals, you're gonna start from here. So they say 1 here is the 10th place. This is the 1 here is the, I don't know, first place. Then the 1 right here is the 10th place. Then 2 is the 100th place. 4 is the 1000th place, and 5 is the 10,000th place. But no, we're actually gonna start from the right. So in Forex, the number 5 here is really the first place. 4 is the 10th place, right? 2 is the 100th place, so it's kind of backwards, okay? Now, if this number 5 increases, so like in this example right here, the initial price is 1.11245, the closing price is 1.11246. So the number on the right is the only number that increased, and it increased by 1. So in that terminology, it's going to be increasing by 1 micropip. But then you can also change it up. You can actually increase this by a pip as well. So if this was 1.11245, and this could become 1.11255, right? I should have written that down somewhere. I'm sorry about that, but if that makes sense. So the number 4 here, if that changes to number 5, you say it increases by a pip. Or because it's the 10th place, you can say this increases by 10 micropips. Okay? So if that doesn't make sense, there's also another lot of videos out there that can explain to you what micropips and pips are, but that's not really going to be important. But it's just going to help you understand like a little bit of the background. So here we actually have, in the second example, the initial price is 1.11245 and the closing price was 1.11345. Now, the 10th or the first place didn't increase. It was actually the 100th place, which means that it increased by 100 micropips, or it could increase by 10 pips, okay? Hopefully that's starting to make sense to you. The last one, you're going to go over here, the 1000th place increase, because the number's still the same, 1.11245, but the closing price is now 1.12245. So the 1000th place increase, which means that this is now 1,000 micropips, or 100 pips. Now, taking it over to lot size again, the reason why lot size is important is because this number right here, 0.01, or even over here, 0.01, really means that each micropip, it goes up, it increased by that lot size in terms of dollars. So this 0.01 really means 1 cent per micropip. So every time this number up here went up by 1, like over here, to 1.11246, if you bought it at 1.11245 and sold it at 1.11246, it would go up by 1 cent. Now, so that's just 1,000 units as well. So if you buy it at 1,000 units in terms of lot size, this still equates to 0.01 cents, because you would divide this by 100,000 units. That'll give you 0.01, which is just 1 cent per micropip, and it'll go up by 1 cent, right? Now, let's say you had 100,000 units. You divide that by 100,000, that'll give you a 1.00 lot size. And in other words, that just means $1 per micropip, right? So every time this number increases, you are making $1. Every time that this number 5 increases, you're making $1. And the reason why I talk about leverage is because the higher the leverage, the higher the lot size you can use. Now you can see why that's so important. If you have a high leverage, these numbers move erratically. These numbers move like instantaneously and super fast, because Forex is the most volatile, market in the world. So this 5 is moving every second. So you can be making $1 or losing $1 every second. Within an hour, this can jump up to 1.112 or 1.11345, like we saw over here. This went up by 100 micropips. That can happen in 5 seconds. That can happen in 10 seconds. That can happen in an hour. That's why it's very high volatility, which you want to have a very large account for, which is why that they have leverage, because if you have a lower leverage, you'd have to have a very large account to be using this kind of lot size over here. You know, so but with a higher leverage, you could be using a 1.00 lot size with about $50 if you have like a 1 to 100 or 1 to 300, you know, leverage. That's why I say like 1 to 50 is best, so you're not even tempted to use that kind of risk. But yeah, we're gonna go ahead and answer these questions here. Example one, just so that it can make sense for you. So I'm gonna go ahead and actually do that in my notes, because that was my whiteboard, but I actually saved it as a picture because I closed the app. But yeah, here let me change the screen real quick. So the example says that right here, the initial price was 1.11245. So let's write that down. Initial price 1.11245. Closing price was 1.11246. Now, what's the math of that? What's the math for this? Let's say this is your USD, right? And we are using a lot size of 0.01, right? That's just 0.01 per micropip. Right, relentless, okay? Now, let's calculate the differential. The differential between this number and this number is just 1 micropip. So you would do 1 micropip times 0.01 cents. Or just to be completely formulaic, per micropip. Which means in this trade, you're just going to make 1 cent. I mean, that's about it, right? It's as simple as that. For the other ones, you can go ahead and skip this video if this math seems very simplistic to you. But the other one is right here, where it actually went up in a differential of about 100 micropips. So you can just calculate that in notes. And that would be 100. So that'll be 100 micropips times 0.01 per micropip, right? And that'll just be $1. That's 100 cents, which is just $1. It's basically $1, all right? And the other one was 1,000 micropips. That was number 3. You can go back there. Number 3, this went up 1,000 micropips. So that's just 1,000 times. That'll just be 1,000 micropips times 0.01 per micropip, which, as we all know, is just $10. Okay, so if you went up 1,000 micropips and you were buying at a lot size of 0.01 or selling at a lot size of 0.01, you'd be making $10. So that seems pretty cool. Seems pretty easy for you guys. Yeah. That's pretty much it about lot size. Yeah, that's pretty much it when it comes to lot size. So the reason why this is important again is because when we get to MetaTrader 4, we're gonna have to know exactly, you know, what all these things are and how this kind of like fits in to the bigger picture. But for the most part, you shouldn't stress too much about this if it doesn't make sense. As the time goes on, you guys will begin to understand this a lot more, I promise. Okay?